Right now, across every silver investing community on the internet, something is happening that I have not seen at this scale in a very long time. People are panicking. Not quietly worried, not cautiously concerned, genuinely panicking. I've been reading the comments, the forums, the social media posts, and the messages from investors who have been following this channel. And what I am seeing is fear at a level that tells me something important, not about where silver is going, but about where we are in this market cycle. People who bought silver at $80 are asking whether they should sell at $59. People who bought at $100 are watching their portfolio down 40% and wondering if they made the biggest financial mistake of their life. People who were absolutely convinced just 5 months ago that silver was going to $200 are now questioning everything they believed about this metal. And I want to speak directly to all of those people today. Because the question of whether you should be panicking right now is the most important question in precious metals investing at this moment. And the answer is not what most people expect. Stay with me through every word of this video, because what I am about to show you is going to reframe everything you think you know about what is happening to silver right now. And the reframe is going to come entirely from data, not from hope, not from wishful thinking, but from real numbers and real historical evidence. This is the video I wish someone had made for me the last time I watched an investment I believed in fall this hard, this fast. Let me start by acknowledging the panic, honestly. Because I think the first thing silver investors need right now is someone who will not dismiss what they are feeling. Silver hit an all-time high of $121.64 on January 29th of this year. That was 5 months ago. Today, silver is sitting at approximately $59 per ounce. That is a decline of more than 51% from the peak in 5 months. If you bought silver at any point during the excitement of late 2025 or early 2026, when the momentum was building, when every analyst was talking about $200 silver, when the supply deficit story was dominating headlines, you are sitting on significant losses right now. And those losses are real. I am not going to tell you that they are not. I am not going to tell you that paper losses do not matter. They matter. They affect your financial position. They affect your peace of mind. They affect your ability to make rational decisions. And anyone who tells you, just ignore the price, hold the physical, without acknowledging the real pain of watching an investment cut in half, is not being honest with you. So yes, the pain is real. The loss is real. And the fear you are feeling is completely understandable, given what has happened to silver in the last 5 months. Now let me show you why that fear, while understandable, is not supported by the evidence, and why the investors who act on that fear right now, who sell their silver at $59 because the pain of watching it fall has become unbearable, are likely making the decision they will regret the most. Let me take you back to something that happened in March of 2020. Silver was rising. Everything looked positive. And then COVID hit. Silver crashed from $18 to $12 in a matter of weeks, a 33% decline in a very short period of time. And the panic in the silver community at that moment looked exactly like what I am seeing right now. The same comments, the same fear, the same questioning of everything. People who had been bullish on silver for years were capitulating and selling at $12. And then something happened. The Federal Reserve announced emergency rate cuts and massive monetary easing. Silver bounced. It went from 12 to 16 in 2 weeks, and then it kept going. By August of 2020, silver had reached $29. From the $12 panic low to $29, a gain of 142% in 5 months. The people who panicked and sold at $12 missed every single dollar of that recovery. They locked in their loss, and they watched from the sidelines as silver more than doubled. Now here is what I want you to notice about that story. The investors who sold at $12 in March 2020 were not stupid. They were not irrational. They were responding to a genuine crisis with genuine fear. But their fear was based on what was happening in that exact moment, a global pandemic shutting down the economy, without accounting for the policy response that was coming. And the policy response, emergency rate cuts, massive quantitative easing, dollar weakness, was precisely the environment that silver thrives in. They got the crisis right. They got the response wrong. And the difference between getting it right and wrong cost them a 142% gain. The second comparable moment is September of 2022. The Federal Reserve was in its most aggressive rate hiking cycle in 40 years. Silver had fallen from $29 to $17, a 41% decline. The bears were everywhere. The narrative was completely negative. And again, the panic in the silver community looked almost identical to what I am seeing right now. People were questioning whether the silver bull market was permanently over, whether the supply deficit story was just a narrative that did not matter to the real market, whether they had been fooled by precious metals YouTubers into holding something that was never going to perform. And then something shifted. Inflation data showed the first signs of deceleration. Rate hike expectations began to ease. Silver bounced from $17 to $24 in 4 months, then to $29 within 14 months. A 70% gain from the panic low, and the people who sold at $17 missed all of it. The third comparable moment is 2023. Fed still hiking, dollar still strong. Silver at $22 after falling from $28. The same narrative, Fed is too hawkish, silver is going lower, get out while you can. And then the Fed signaled it was approaching the end of its hiking cycle. Silver went from $22 to $32 over 12 months. A 45% gain. Same pattern, same panic. Same recovery for those who held. Same missed opportunity for those who did not. I am showing you these 3 comparisons not to tell you that silver is definitely going to recover right now. I am showing them to you to make a very specific point. Every single time silver has experienced a decline of this magnitude, driven by the same forces that are driving it today, Fed hawkishness, dollar strength, and macro headwinds overwhelming the fundamental supply story, the people who panicked and sold at the low locked in losses that turned out to be temporary. And the people who understood the mechanism, held their conviction, and waited for the forces suppressing silver to reverse, were rewarded with gains that more than compensated for the pain of holding through the decline. Now let me show you the mechanism driving today's decline, because I think this is the most important thing you can understand right now. Not what silver is doing, but why. Because when you understand why, you can evaluate whether the why is permanent or temporary. And that distinction is the entire difference between a rational decision and a panicked one. Silver is falling right now for 3 specific and identifiable reasons. The first reason is Federal Reserve rate hike expectations. Markets are currently pricing in 3 Federal Reserve rate hikes across 2026. The September rate hike probability is sitting at 59%. When rate hike expectations are this elevated, the opportunity cost of holding silver, which pays no income, no dividend, no interest, rises significantly. Investors who would otherwise hold silver choose instead to hold treasury bonds earning 4 to 5% per year with essentially zero risk. That choice, multiplied across millions of investors simultaneously, creates selling pressure on silver. The mechanism is real, it is mathematically precise, and it is directly responsible for a meaningful portion of the decline from January's high to today's price. The second reason is dollar strength. The US dollar index has been sitting near 13-month highs above 101. Because silver is priced globally in dollars, a stronger dollar makes silver more expensive for buyers using euros, rupees, yuan, and every other currency. Global demand softens mechanically, not because people want less silver, because their currencies buy fewer dollars and therefore fewer ounces. Dollar strength and silver price move in opposite directions with near mechanical precision. And right now, the dollar is strong because of, you guessed it, rate hike expectations. The 2 forces compound each other. The third reason is the removal of the Iran war premium. When the Iran conflict began in late February, oil surged above $100 per barrel. That elevated oil price pushed inflation higher. Higher inflation made silver attractive as an inflation hedge, and that geopolitical premium, a price increase specifically because of war risk and inflation fear, got built into silver's price over the course of its run from $47 to $121. Now, the US-Iran peace roadmap is advancing. Oil has fallen back to pre-conflict levels, confirmed by multiple sources including FX Street and Trading Economics. And as that geopolitical premium gets removed from silver's price, the price falls to reflect a world where the war-driven inflation spike is easing. FX Empire said it clearly this week. Every one of these factors was bearish on its own, and stacked together, they produced a correction that took silver from its highs to multi-month lows in weeks. Here is the crucial question. Are any of these three forces permanent? Is the Federal Reserve going to keep raising rates forever? No. Rate hiking cycles have a beginning and an end. Every previous hiking cycle in modern history has eventually given way to a pause, then a pivot, then rate cuts. The current cycle, driven by war-induced energy inflation, is already showing signs of its own ceiling. Oil has fallen back to pre-war levels, which means the inflation that justified the rate hikes is already starting to ease. Is the dollar going to stay at 13-month highs forever? No. The dollar's strength is directly tied to rate hike expectations. When those expectations fade, and they will fade as inflation data improves, the dollar weakens. And when the dollar weakens, silver gets immediate mechanical relief. Is the Iran geopolitical premium gone forever? Not necessarily. The 60-day peace roadmap is advancing but has not concluded. And if the ceasefire holds permanently, oil stays low, inflation cools, and the Fed has less justification for 3 rate hikes, which paradoxically becomes bullish for silver. All 3 of the forces suppressing silver are temporary, not permanent, not structural, temporary. Now let me show you what is permanent. And this is the part that the people panicking right now are not looking at. The Silver Institute's 2026 World Silver Survey confirmed 6 consecutive years of supply deficit. The world has consumed more silver than it has produced for 6 years in a row. The cumulative drawdown in above-ground stockpiles since 2021 has reached 762 million ounces. That physical reality does not change because the Federal Reserve is hawkish. It does not change because the dollar is strong. It does not change because oil has fallen. Silver is being consumed by solar panels, by electric vehicles, by artificial intelligence data centers, by medical devices, by electronics of every kind, at a rate that mining simply cannot keep up with. And FX Empire confirmed this week, the fundamentals did not break, the macro overwhelmed them. That is not my characterization, that is FX Empire's characterization. The fundamentals are intact, the macro is what moved the price. This week is going to be one of the most important weeks for silver in all of 2026, and I want to tell you specifically why and what to watch. On Wednesday, Kevin Warsh, the new Federal Reserve Chairman, will speak at the ECB Forum. His last major speech contributed to the hawkish sentiment that sent silver from $66 to $56 in a single week. If Warsh's tone on Wednesday is even slightly less hawkish than his June 17th performance, if he signals that he is watching the inflation data carefully and that the path to 3 rate hikes is not yet confirmed, silver will respond immediately and meaningfully to the upside. If his tone is equally hawkish or more so, silver faces renewed pressure. Watch Wednesday. On Thursday, the non-farm payrolls report drops. This is the single most important piece of labor market data the Federal Reserve watches when deciding whether to raise rates. If the jobs market shows signs of softening, if hiring is slowing, if wages are growing more slowly than expected, it weakens the case for aggressive rate hikes. A softer NFP print on Thursday is one of the single most bullish near-term catalysts silver could get right now. If NFP is strong, if the labor market is running hot, it gives the Fed more ammunition for its hawkish stance, and silver faces more headwind. The direction of Thursday's NFP print will likely determine whether silver ends this week above $65 or tests the $55 low again. Now here's what I want you to do with all of this information. I want you to ask yourself one honest question. Has anything I have shown you today changed the long-term fundamental case for silver? Have the 6 consecutive years of supply deficit disappeared? Have the institutional forecasts from JP Morgan at $81, Goldman Sachs at 85 to 100, Citigroup at 110, and long forecast at $82.87 in December been withdrawn? Has the structural demand from solar, EVs, and AI data centers evaporated? The answer to every one of those questions is no. Nothing about the long-term fundamental case for silver has changed. What has changed is the short-term macro environment. 3 temporary forces are overwhelming the permanent structural story. And history tells us, with 3 clear and recent examples, what happens when temporary forces eventually lose their grip. So should you be panicking? Here's my honest answer. If you bought silver as a short-term trade expecting quick profits, and you cannot afford to wait for the temporary macro headwinds to resolve, then yes, you need to assess your position honestly and make a decision based on your actual financial situation, not your emotional attachment to the silver thesis. I would never tell someone to hold an investment through pain they genuinely cannot absorb financially. Your personal financial stability matters more than any investment thesis. But if you bought silver as a long-term position, if you believe in the supply deficit story, if you believe that solar and EV and AI demand is real and growing, if you believe that the Fed will eventually pivot and the dollar will eventually weaken, then the honest, data-driven answer is no. You should not be panicking. You should be watching Wednesday's Warsh speech. You should be watching Thursday's NFP data. You should be understanding the mechanism instead of reacting to the price. And you should be remembering that the investors who sold silver at $12 in March 2020, at $17 in September 2022, and at $22 in January 2023 all made the same decision for the same reason. The pain of watching an investment fall became too great to bear, and all of them missed the recoveries that followed. The panic is understandable. The fundamentals are intact. The temporary forces suppressing silver are identifiable. And the historical evidence for what happens when those forces reverse is clear and consistent. I am John A.G., and this is what I am here for, to give you the data, the context, and the honest picture when the noise is loudest and the fear is greatest. Subscribe right now so you do not miss Wednesday's real-time reaction to Warsh's speech and Thursday's NFP breakdown, because those two events this week are going to tell us an enormous amount about which direction silver resolves from here. I will see you Wednesday. Be ready.